The broadcast is now starting. All attendees are in listen-only mode.
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Friday, 25th day of April, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast, that's our live training room. So that's reserved for members only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, just go to mytradingiq.com. Right here, mytradingiq.com. Click that big purple button, fill out the form. We'll get your indicators up and indicating today. You'll have the weekend to get accustomed to them, and then you'll have 5 consecutive trading days next week where you'll have access not only to the live training room, but to everything that our members have. Everything a passport holder has access to, you'll have access to as well. And then at the end of the 5 consecutive days next week, you'll be able to make a well-informed and intelligent decision as to whether or not trading is right for you. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break, and then we come back for this broadcast, the afternoon broadcast, which is open to the public. That's everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, only have to do it once. Go to mytradingiq.com, scroll down the page to where it says Noon Broadcast, click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before this broadcast starts. In that email there's a link, so at 12 noon Eastern all you have to do is click the link in the email and it'll automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And some days you'll be busy, you can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,800 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. And thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now there's over 2,800 individual daily broadcasts. So obviously you're not going to watch them all, nor do you need to. But it's a great resource to have handy. And again, it's a way for you, a newcomer, to see how we've evolved over the years. youtube.com/CFRN. This is our normal schedule for the afternoon broadcast. Yesterday we did things a little different, but we're back on schedule today. And we'll pick up with the devotion we started last week, Holy Week and Easter. Yes, I know those days have come and gone, but we started last Monday with Palm Sunday, and then we had a couple days where we didn't do anything for whatever reason. So anyway, this is day 7 of 8. So we'll be on this topic one more day come Monday. Today's scripture is John 19, verses 39 through 42, and I'm going to share it with you from the Message translation. Nicodemus, who had first come to Jesus at night. You probably didn't know this. He was the original Nick at night. Came now in broad daylight, carrying a mixture of myrrh and aloes, about 75 pounds. They took Jesus' body and, following the Jewish burial custom, wrapped it in linen with the spices. There was a garden near the place he was crucified, and in the garden a new tomb in which no one had yet been placed. So because it was the Sabbath preparation for the Jews, and the tomb was convenient, so they placed Jesus in it. Today we're talking about Holy Saturday. It's that day that never gets talked about much or preached about much. Good Friday, lots of sermons. Easter Sunday, lots of sermons. But think about the disciples. How do they feel? Number one, they're in hiding. They don't really understand what's happened. Have they been betrayed? Have they been deceived? Will they be on the run for the rest of their lives? All of these questions hang heavy in the air until the following day. Holy Saturday is marked by darkness and waiting in grief, in hope, and with a whole lot of unanswered questions. Now that Jesus has been killed, the chief priests and Pharisees want Jesus' tomb secured for at least 3 days. The Roman leader, Pontius Pilate, commands his guards to protect the tomb from anyone wishing to enter. They also rolled a stone in front of the tomb's entrance to seal it, meaning they squished a lump of clay or some soft substance into a seam that would break if the stone was tampered with. They pressed an imperial Roman symbol into the clay so that anyone looking to disrupt the seal would face the consequences of the brutal Roman government. Imagine you're an early follower of Jesus. You've been waiting for the promised Messiah your entire life. And then you hear the word of Jesus. You've spoken with him and seen his miracles, and you have come to believe that he is filled with the unending, indestructible power of God because he is the promised Messiah. But now, on this Saturday, he's dead, crucified, murdered. You heard him talk about dying and being raised back into life, but how's that even possible? Was he just another magician? Another wandering sage peddling false promises? Your newly kindled hope in the Messiah would have been snuffed out with Jesus' execution. So Holy Saturday invites us into the experience of darkness, into the questions and grief that so often accompany this life. Where is God? Why do we experience so much pain? We thought Jesus came to rescue us, but what now? Today, we too sit in the painful darkness of Holy Saturday and find rest through knowing that in the darkness of life, God is alive and working. In deep sorrow, God is still there. In our waiting, God has not forgotten us. He is loving us and working in his ways to restore life to each of us. The sealed stone will not be able to hold Jesus in place because death is not the end. Let's pray. Heavenly Father, thank you for the quiet faith of Nicodemus and Joseph of Arimathea, who honored you in your death with courage and love. May we also serve you boldly, even when the world watches in silence. Teach us to treasure your sacrifice and live lives that honor your burial and resurrection. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Friday. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow down 113 points. The Nasdaq up 75. S&P 500 up 8. The Russell 2000 down 14. So yes, we have those dreaded mixed markets. As futures traders, we like to see all four red or all four green, because as futures traders, we can be long, short, and long again all in the same hour if that's what the chart in front of us tells us to do. But when the markets are divided as they are today, it becomes a bit of a tug of war, and you don't get the same follow-through that you get when they're all four the same color. In the commodity basket, crude oil is up 14 cents, trading 62.93 last. Gold down $53.70, over 1.5%, trading 32.95 last. Silver down 59 cents, trading 32.91 last. That's a drop of 1.75%. In the Asian markets at the close, the Nikkei posted a gain of 666 points. Yes, that's what I said, 666. And that's a gain of almost 2%. The Shanghai dropped just 2 points. The Hang Seng gained 70. And in the European markets at the close, FTSE up 7, the DAX up 177, almost 1%, the CAC up 33. So we had a mixed day in Asia. It was a green day for the UK. And as I said, it's a mixed Radio Friday here in the US of A. So let's take a look at the news. I got breaking news coming across my screen. Former Representative George Santos was just sentenced to 87 months in his New York federal fraud case. George, what were you thinking? Vladimir, stop. At least 12 people were killed and 90 others wounded following a Russian missile and drone barrage on the Ukrainian capital of Kiev early yesterday. It's the deadliest attack on the city since last summer. The strike came as prospects of a U.S.-led ceasefire became increasingly tenuous and prompted President Donald Trump to call on Russian President Vladimir Putin to end fighting. More than 3 years after Russia launched a full-scale invasion, its forces control about 20% of Ukraine, covering an area in the east that includes around 3.5 million residents. The most recent proposal from U.S. officials floated concessions from Ukraine, including freezing current battle lines, recognizing Russia's 2014 annexation of Crimea, and taking NATO membership off the table. Top U.S. officials, including Secretary of State Marco Rubio, pulled out of a Wednesday meeting at the last minute over pushback from Ukraine and Western allies. Happy birthday, Monty Python. This month marks the 50th anniversary of Monty Python and the Holy Grail, the 1975 cult classic that satirized the legend of King Arthur and helped define Pythonesque comedy, characterized by abrupt cuts, silly punchlines, and deliberately low-budget effects. Produced for around $400,000, the film has since grossed over $5.7 million and is widely considered one of the greatest comedies ever made. If you've never seen it, you might want to look at it this weekend. I'm sure it's on one of your favorite streaming services. The smartphone ecosystem has avoided the biggest brunt of President Trump's tariffs for now. But if that for now ends, major phone carriers appear poised to dump the higher cost of smartphones onto the laps of consumers. Trump earlier this month exempted smartphones and some other electronics from his reciprocal tariffs, though he left a 20% fentanyl tariff on China intact. The exemption could prove temporary, keeping the prospect of 145% tariffs on China, where Apple makes most of its iPhones. They're trying to move that to India. because we'll have a much better chance at putting a deal together with India. But of course, you know what we think. We think it should be made in America. The price of an iPhone 15 could increase from $839, would increase to $839 from $699 currently, according to an analysis from tech publication CNET. The iPhone 16 would climb to $959 from its current price of $799. Google. Let's see. Google was up earlier in the day about 3%. Now it's down to about 1.5%. After the company reported strong fiscal first quarter earnings, beating expectations. It also announced a 5% dividend increase and $70 billion in stock buybacks. There's nothing more wasteful for a company to do than to buy back their own stock, especially if you're Google. That money, that's not going to increase shareholder value. Maybe you deploy it into research and development. But hey, I'm no economist. For Q1, Alphabet reported earnings per share of $2.81 on revenue of $90.2 billion. And as analysts were expecting, earnings per share of $2.01 on revenue of $89.1 billion. So they beat the street. Gold fell at the end of a very volatile week that saw prices notch a record before retreating, with some signs that trade tensions may be easing. Bullion shed as much as 2.5%, dropping for the third time in 4 sessions. China is considering the suspension of its 125% tariff on some U.S. imports, according to people familiar with the matter. Trump told Time magazine he expects to wrap up trade deals with U.S. partners looking for lower tariffs in the next 3 to 4 weeks. The president gave mixed signals about the status of talks with China, even as the Asian nation has denied negotiations are even taking place. Tesla shares also jumped today, extending their rally after CEO Elon Musk said he would spend more of his time focusing on Tesla as the Trump administration moved to loosen rules around self-driving cars. The stock was up over 6% in early trading, making it one of the top performing stocks on the S&P 500 and NASDAQ today. And currently Tesla's up a little over 9% on the session. That's a good rally. And last, President Donald Trump is badgering the Federal Reserve to cut interest rates. But even if the Fed gave in to the pressure, it wouldn't necessarily lead to lower borrowing costs for consumers. In fact, economists say Trump's ongoing attacks on Fed Chair Jerome Powell and his tariff policies could keep the longer-term interest rates that matter for consumers and businesses higher than they otherwise would be. A less independent Fed can lead over time to higher borrowing costs as investors worry that inflation may spike in the future. As a result, they demand higher yields to own Treasury securities. Trump has repeatedly urged Powell to cut the short-term interest rate. The Fed typically reduces its rate during an economic downturn to encourage more borrowing and spending, and raises it to cool the economy and fight inflation when prices rise. You know, Jerome, again, I'm not an economist, but it doesn't take an economist or a rocket scientist to know that right now, an emergency rate cut would be the single best thing you could do for America, and more importantly, the American people, the one who get up and go to work every day and by the sweat of their brow pay taxes, so Congress can go flying off to El Salvador to get their photo op. You know what? If he held a State of the Nation address today, I wouldn't blame the guy, and I know he won't do it because he's Trump. If he said, you know, I did my very best to save America, you guys can have it. I'm done. Everything he tries to do for the American middle class, the workers that built this nation was built on the back of small businesses. And everything Trump does to try and help the situation, the other side of the aisle, and these stupid circuit court judges. Now, the Supreme Court's ruled once. They need to rule again, and they need to stick to their guns. These circuit court judges, these nobodies, should not be telling the president what he can and cannot do. We didn't elect them. They were appointed by people like Biden, Obama, and Slick Willie. All right, enough of that. Logic 247. That is our 24/7 around-the-clock E-mini alert service. Not just E-minis, but also crude, gold, silver. We're currently in week 351. Over the last 351 weeks, we have issued over 19,400 individual handcrafted alerts. Valerie did the recap this morning at 6:30 a.m. Eastern. She'll finalize it for the week this afternoon. I think last week we ended up with 8% stopped out, but this week, since the markets opened Sunday night, this past Sunday night at 6 p.m. Eastern, we've issued a total of 59 alerts, 5 never triggered. At the time of the recap, we were still waiting on the outcome of 11. It gave us 43 actionable alerts, of which 5 or 12% would have been stopped out based on market structure and a simple process we teach all of our passport holders. Over the last 351 weeks and over 19,400 alerts, we've averaged on a weekly basis 20% or less of the alerts being stopped out, again based on market structure and the simple process we teach all passport holders. Now, every logic alert has an entry price, an initial target, help you get your goal for the day, and usually additional targets, and then a final trade to target. The logic alerts can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. But the true purpose of the Logic 247 alerts is to help you learn how to read a chart. Now we're approaching that big round number at 20,000. We're over 19,400. We're closing in on 19,500. So if you want to learn how to read a chart, I suggest you get busy. Drop my phone. Don't want to do that. Can't afford to buy a new one. Those prices is true. All right. So that's where we stand, and Valerie will finalize it for the week this afternoon, early evening. Now, long before we had Logic 247, a lot longer, we had our original alert service, the concierge trade alerts. They're different. Number one, they don't come out around the clock. They're published as a static report I'm back to the 5:55 p.m. 5 minutes ahead of the Globex Open. Today's Friday, the Friday session. We all know that. But it began last night at 6 p.m. Eastern. Even though it was still Thursday night here in the U.S., the Globex markets open each evening at 6 p.m. Eastern. Of course, they're closed tomorrow, but Sunday night the markets will reopen, and that will be the beginning of the Monday session. So all of our members and all of our trial members had all of these targets 5 minutes before the market opened last night. The S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. So let's go take a peek at the daily chart of the ES, the bellwether. And we were joking last night in the members only workshop about what a tiny candle we had. And that is a perfect doji aligned right at the 50% reverse fib. Why is it a reverse fib? In a downtrend, you draw your fibs from the high to the low. In an uptrend, you draw your fibs from the low to the high. So we closed yesterday above the BBC. That's the green line. Stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price closes below the green line, we're bearish and expect lower prices. Price travels in legs. Leg, retracement, leg, retracement, leg, retracement. Now you might notice that when price does pull back to the BBC, you see price always reverts to the mean. And in our case, the mean is green. And as I said, it's called the BBC. Whether price pulls down from above or pulls up from below, the pullback holds more often than it doesn't. But eventually it will trade through, as it did here at the beginning of the downtrend. Now we closed yesterday right at that. We spiked the 50% reverse fib, closed right at it. And today, doji. That means indecision. Okay. There's a PDF out on the internet I wrote many years ago called The Secret Life of Candles. There's like 200 different signals. Most of them you'll never see in your lifetime. But there's about 10 that you see every day, repeatedly. You should probably learn to recognize those. And they're not the latest thing to come down the pike. Japanese rice traders created the candlestick theory over 400 years ago. Okay? All right. Now, fibs go back to the 14th century. Candlesticks go back 400 years. So, indecision. That means the institutions don't know if they should be long or short. But with blue and climbing, if we close here, if we were to close right here today, that would be bullish. If we close below the 50, we've got support here at the BBC. Remember, the pullback holds more often than not. Then we've got the black step line, and we've got blue and climbing, and we've got the 38% reverse fib. So right there, support times 3. Support there, and of course support at the low of today. Yesterday's high was 55.41 half. Today's high 55, 53. Pretty quiet out there, obviously. Now, institutional traders, the ones with deep pockets that move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. So I recommend whatever it is you trade, futures, stocks, crypto, Forex, ETFs, spend 2 minutes with the daily chart before you drop to your smaller time frames and start trading. It does two things. Number one, it's a free look over the shoulder of the deep pockets that move price, and you're able to identify where the market is most likely to find resistance. Now you see this high right here? What's the high? 64.75. And today's high, 53. So at 64.75, you should anticipate some resistance, even if we start to move higher. Now, we got a pretty good gap here. It may take a few days to get that filled if we keep moving higher. Then the next major resistance is the 62% fib. Now, these areas of support I just identified, you can't see this on your smaller time frame. So again, just spend 2 minutes with the daily chart of whatever you're about to trade. It's a whole lot easier to go with the flow than to fight the flow. So, all 30-minute chart, all alerts are created on the 30-minute chart. There we go. Okay. The vertical line separates today, Friday, which began last night at 6 p.m. Eastern. And remember, these targets that you see, all of our members and trial members had them 5 minutes ahead of the open. Okay? And at 8:30 last night, during the 8:30 candle, bang, we hit the long target. Now that one candle, gotta get a read on it, opened at 34 and ran up to 43. There's 9 points in that candle. You only need 2 points to get your goal for the day. When the market finds resistance, it's going to go look for support, which it found at the low of the opening candle last night. Support will send the market looking for resistance. So we ran back to the target on this candle and then continued higher and spiked the highest weekly trading zone for the week, 55.46/47. Resistance takes us back to support. Now support here, you see the pull back to the BBC held. It bounced us up one more time to the long target. So we hit it once, twice, 3 times, 4 times. And we may be getting ready to hit it again. But notice blue and climbing turned to red and falling. Okay, blue and climbing is bullish, red and falling is bearish. So we closed below the BBC. Okay, see this area right here? Okay, it's right here. See it? All right, so we did travel down to this area right here. You see the low of this candle, and you see right here where the step line crossed. Okay, that's a important price, important area, and the market respected it as support right here. You see, look at the horizontal line of the cursor. See how that lines up? That is super important right there, and the market respected it. Red and falling turned to blue and climbing. We're back above the BBC, and now we're making yet another run at the long target. On the Dow, here's where we opened. Price was trapped. We had resistance overhead, support below. Had a slight retracement and then a muted rally. It didn't take us all the way up to the target, but there was certainly plenty of room there from 43.30 up to 43.70. That's 40 points. You only need 20 points to get your goal for the day. You see, this opened as a green candle, but it closed red. Patience is a virtue. Pullback held, pullback held. But once blue and climbing turned to red and falling, we traded through. Took us right down to the weekly trading zone. Now these zones are published every Monday morning at 6:15 a.m. Eastern for the last 15 plus years. Once they're published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. They don't change in any way whatsoever. When price drops to a zone, we expect support till proven otherwise. When price rallies up to a zone, we expect resistance till proven otherwise. And so we dropped to the zone, spiked it just a little bit, because we had support right here. That bounced us up to the BBC, the pullback held, sent us down. We put in a lower low. This was a bit of an unusual spot, but it's that 10 o'clock news that came out. Here's the 10:30 candle where we began to climb. Red and falling has turned to blue and climbing. We're back above the BBC. But on the way up, you got to look for resistance here. Now this resistance, you see this bearish cross? That's when the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. And it was. That sent us back down to the lows we just talked about. So on the way up, you've got this high, this high, this high, this high, and this high, all potential resistance. So the market's got to climb a wall of worry. And when we did the numbers around the world, the Dow was one of the two in the red. Okay. All right. The Russell. That would be another one in the red. Here's where we closed yesterday, and here's where we are now. We were much deeper in the red. We opened, the opening candle last night was right at the zone, but we had resistance overhead. When blue and climbing gets directly above price, it becomes potential resistance. And it's probably on its way to turning to red and falling, which is bearish. That pushed price back to the BBC. The pullback held. So then we get a leg and a retracement. And now this zone is held as resistance. It's a zone published Monday morning at 6:15 a.m. Eastern. And then we get a leg, a retracement, and a leg. And this leg, you see this little spot right between here? You should be expecting support there. Red and falling turned to blue and climbing. That has put us back above the BBC. And 1963/64 is this week's highest weekly trading zone. NQ. This is where we opened, ran into resistance at the zone. That's the highest weekly zone on the NQ. And we basically just consolidated all night right at that weekly trading zone. But blue and climbing finally turned to red and falling, and it took us down a notch or two. And you'll see that this low is this low. That's market structure. And it's also this low. Support will send the market looking for resistance. We now, with the help of blue and climbing, we've overcome the BBC, we've overcome the weekly zone. question is, can we take out the high of the session? 47.5. And this current candle is 66. Now, based on the past 15 years of history, by close of business today, we would expect price to be at or below the highest weekly zone. That's under normal market conditions. Obviously, this week has not been normal market conditions. And all kinds of weird stuff happened. Everybody's on a tariff tizzy. Crude oil. So if you're going to trade this, make sure you get well above this, okay, and then go look a lot left to see where your resistance is, okay. You got to learn how to do this yourself. We had a slightly higher gap open on crude last night, and it took us right up to the target, and we came just shy of the zone by 3 ticks. We got to 63.12. The zone's at 63.15. Resistance always sends the market looking for support. The pullback to the BVC held, sent us up to basically, come on, we took out these highs from yesterday by how much? By a little bit. We're always suspicious of a little bit, okay? Back we come to the BVC and the top of the long target. Support times 2, that sends us back up to the zone, 63.15/63.20. Then blue and climbing turns to red and falling. We get below the BVC. Come all the way down to this zone. Support bounces us all the way up to the BVC. And the pullback held. That sent prices lower, down to and through the short target. Now these lows right here, okay, all these wicks to the downside, right? That shows buying pressure back 2 days ago. And those buyers comfortable buying at this price, they came in strong. Blue and climbing, we're above the BVC, and we're consolidating right now at the long target with this zone slightly overhead. And there's still 3 more zones overhead on crude. Okay. From support to resistance, back to support, back to resistance, back to support, back to resistance. That's how markets work. Gold. This was the opening candle last night. Now again, you had this target 5 minutes before the market opened. So we opened at 33.62. From 62 to 77, that's $1,500 per contract traded in that one candle. Just to the target. It went a little further, as you can see. Then the market ran into resistance. Wonder why. That would be it right there. Resistance sends us to support. We got a little bounce off the BVC, so the pullback held, but it was short-lived because we had red and falling overhead, and that took us down through the BVC, through the zone. Then we got a retracement. Now, only 3 things happen when price encounters a zone. 70% of the time, it's going to be consolidation. 20% of the time, rejection. 10% of the time, the slice. That's when a 30-minute candle slices through a zone like it's not even there. When that happens, and the move runs out of steam, price will typically retrace back, or attempt to retrace back to the zone it sliced through, and then continue in the direction of the slice. So it took us right through the short target down to the zone where the market found support. Support bounced us up to resistance. Resistance sent us down to support. Back to resistance, back to support. And the low of the session. Okay. See, 2 days ago we had a low down here at 3270.8. Today's low is 3274.8. The buyers came in early, pushed us up to red and falling. Resistance would send us back down. Okay. Once again, buyers came in a little early. Okay. We've overcome red and falling. We've overcome the step line. So from here, price has an opportunity to move up to the zone and the BBC. That's resistance times 2. Now that would be a counter trend trade. And the Logic 247 channel, every one of those trades, all 14,000, all 19,400 plus, they're all trend trades as defined by the 30-minute chart, price, and the BBC. There are no counter trend trades in the entire channel. And when you become a member, you have access to the whole channel. Actually, you have access to the whole channel even when you're on the trial. All 19,400 plus. So resistance times 2, potentially giving us another leg to the downside. Silver, this was the opening candle last night. We opened at 33.55. So we ran up 12 pennies. That's $600 per contract traded. If you've earned the right to trade 10 contracts, then that's $6 grand. Resistance will always send the market looking for support. We traded through the BBC, hit the short target, found the support based off this bullish cross. That's when the blue line gets above the green line. You have a bullish cross that leads to an extended move. The first time price revisits that area will almost always be good support, and it was. Bounced us up to red and falling. Resistance sent us back to the target support. We consolidated. Then we dropped to the weekly zone, published Monday morning. It held as support, gave us a nice doji. Price goes to find once it finds support, it's going to go look for resistance. Once it finds resistance, it's going to go look for support. Resistance, support. So now what's it looking for? Resistance. See how the step line on the way down, they were running parallel, okay? But now the black step line, which was on the left side of red and falling, has now crossed over and is on the right side of red and falling. So what does that tell us? That price is going to attempt a retracement back to the BBC. Now it first has to overcome this high right here. See that high? That's also that low. This is what I mean when I talk about market structure. It's like a giant jigsaw puzzle, and all the pieces need to fit. But what we've learned over 51 weeks, however long it's been, is that about 20% of the time the market does not do the next high probability thing. So I can live with that. Can you? If you're chasing that holy grail, wasting your time and treasure to find that perfect whatever, that will allow you to never get stopped at again. You're not a trader, because traders know that Holy Grail not only doesn't exist, it can't exist. It would defy the laws of physics, science, even God. And with silver, by the way, you only need a 2-penny move to get your goal for the day. So right here, as price was coming down, an entry, once you took out that low right there, you're at like 33 bucks. And so we dropped, another 12 pennies down to the zone, 11 pennies. Another from there to there, $550 per contract traded. Okay, we still got the doji at the 50% reverse fib. Looks kind of bullish, I guess only because the horizontal line is just above that fib. So it's pretty quiet for Friday. We'll see what happens as we move into the close. If we close where we are now or higher, that is extremely bullish. But we have some resistance directly overhead. Okay, keep that in mind. So it may not be a straight shot up to the 62. This area here, this gap, needs to be filled. For price to rise requires financial commitment. For price to fall, it does not take financial commitment. If institutional buyers hit pause on the buy side, now they nibble, right? The 50% fib retracement, whether it's regular fibs or reverse fibs, on a daily chart of anything is always a big deal. Unfortunately, the deep pockets just aren't quite sure what to do with it. We see little flashes of green there. Okay, obviously that's bullish. Just keep this high over here, 55, 64, 75. Keep that in mind as potential resistance. Again, that number is 55, 64, 75. Okay. All right. Well, it's Michael time.
It is.
Oh, I had no idea you were here.
I am here.
All right. Take it away.
All right. I will do that. Here we go. Excuse me. All right. Coming over here. Here we are. All right. Hopefully. Good. All right. Well, good afternoon, everyone. Today is Friday, the 25th day of April, 2025. Now, if you have not taken a free trial with us and you would like to take a free trial with us, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. Just click on the purple button. When you do, it's going to bring you to this registration page. Just fill it out. I think this is the right one. Yep. Just fill it out down here at the bottom. Give us your TradingView login ID, okay? If you don't have one yet, click on this button right here. It's going to bring you to this page. No, it'll bring you to this page where you can watch this video. It's a 3-minute video. Watch that video. You can end up clicking on this link right here. Get TradingView. Okay, get the essential version if you want to start out with. It's $12.95. It'll be free for a month, I think. They won't charge you a credit card for a month, but when you do actually get it, it's $12.95. You got to get the real-time data. The real-time data is $7. All right, you don't have to get real-time data, but if you want to follow along with me, you're going to have real-time data. You could get it through your own broker. If you have one of these brokers down here at the bottom that you can copy your data in through. There's a lot more. There's like hundreds, over 100, I think. How many are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 100. Almost 100. Looks like there's about 95 of them. Different brokers down there. You can probably move your data from that broker to your TradingView charts. Probably. I'm not sure. You can check on that. If you can, you'd get free data. Anyway, you pay for whatever you're paying for down your broker. Let's get into the spreadsheet. Now, I got a little less today than I wanted to. I stopped out 2 times on the NQ at the end of the session. So that was minus 120 NQ ticks. Think about that, 120 NQ ticks. And that put us, well, if you can read the spreadsheet, you got to read all the CFTC risk disclosures on the bottom. Today is the 25th day of April 2025. We're a minus 90 on the NQ, plus 30 on the Russell, plus 108 on gold, and plus 34 on the ES. That put us at plus 1,205 overall with 1 contract on the morning session. Today took 8 minutes and 4 trades to get to the goal for the day. At that point, we're at $1,150. And we took a total of 29 trades. So on the month now, we're up $31,742 over 16 trading days, averaging $1,983 per contract per 2-hour trading day. On the year now, we're at $116,030 over 69 trading days, averaging $1,681 per contract per 2-hour trading day. Following the 24/20 blueprint, if you were to quit trading when you get the goal for the day, that means you get $100 in this column. When you get the goal for the day and add 1 contract per month, so far this year you would have only had to work 8.93 hours, just about 9 hours this year, and you'd be up $28,492 trading 4 contracts right now. You'd be averaging $3,189 per hour. Okay. All right. That is that. Now, we didn't place a ton of trades today. We had a fair number of trades, but not a whole bunch. So I'll just start with gold and we'll work our way across. Gold was where we had the majority of the trades. And you can see here they all were. All right, we started out. All right, looks like I didn't get any of those. Here it was right here. Our very first trade on gold was here. We ended up with a break even. Then the next trade we had a 9, and then the next trade we had a 10. That put us at 19. This is where we got the goal for the day on this one. We had 1 plus 4 on the ES and then a stop out on the ES. On the ES we're at minus 6 and we got 19 here. That put us at 125 overall, I think, or 115, something like that. But that is where we got the goal. Now I didn't trade it anymore because I took the time to explain some stuff in here, so I stopped trading it for a few minutes. I was not even looking at this. I was explaining the spreadsheet, I think. Then the next trade that we took was right here. We picked up the whole 25 ticks. We ended up with a 44 after that. And then we did it again here. We ended up with, well, something like that. We got up to 84. We got, 84 on that. So, I'm sorry, it's not 84, it's 54. We got 10 on that. Ended up with 54 there and 2 more there to get us to 56. And then 2 more there that got us to 58. 25 there that got us to 83. Then a break even and 2 that got us to 85 and 3 that got us to 88. Then we stopped out right there, put us down to 73. Then we had a break even there and a plus 25 there, got us up to 98. And then we had a plus 10 there, got us up to 108. And that is where we ended it for the morning session. Okay. During the break, you can see in here during the break that there were, I'm just trying to go through here and see something. During the break in here, you can see that there were some decent trades. There was one here that would have stopped you out. Then you had one right here, you could have gotten it right back. Another one here, you would have gotten it. Another one right there, you would have gotten it. Another one right here, you would have gotten it. Another one right here would have stopped you out. And you had one here, you could have gotten it right back. So there's some decent trades here during the break. All right, and that was gold today. Gold was our big winner on the day. We ended up with 108 ticks on gold with 1 contract. Now the Russell, this is the whole Russell right here. Let's see, we started off with a plus 20, and then we had 10 more to get us to 30. Then we had 15 more. This was an aggressive trade here. We had 15 more to get us to 45, and then we stopped out. That put us back down to 20. And then we got 10 more there to get us to 30. And that was it for the Russell. During the break, you didn't have a lot of movement there on the Russell. So that was it for the Russell today. The ES, right back and forth a little bit on the ES too. We started out right here with that +4 that I mentioned earlier on the ES. We had +4 there. Now, when we started out, we're on a 7 range. So we had a +4 there, and then we stopped out there, and that was the 7 range. And then I switched to the 19 range because it wasn't giving enough volatility to go to the 19. So I went back to the 19. And then we had, at that point, we're at -6. Coming into this trade, we're at -6. We got 6 ticks on that put us to 0. Then I stopped out on this one, -10. I hadn't fixed the DOM yet. It would have been a bigger stop out. Had I fixed the DOM, it would have been a bigger stop out, but it was still set to a 10 by 30 bracket. So I ended up stopping out there with a -10. And then here I got 24 ticks on that one, put us up at +14. And then I got another 20 ticks there that put us up to 34. And that is where we ended it for the morning session. Okay. There were some nice trades in here during the break. Well, one or two. One really nice one right there. One okay one right there. Break even is what it would have been for me. One right here that would have been a nice trade. And we never had any short trades. Right, and that was the ES. The NQ now. Now, I was drawing all this stuff on the NQ. If it were going to go up, this is what I was saying it was going to go up to. You can see it did eventually get up there, all the way over here. But it took it a while. It sure did take it a while to get up there. We did have some good opportunity on the ES to do some training this morning, so that was good. And we didn't have that many trades there on the ES, I'm sorry, on the NQ. Our first trade on the NQ was right here. We got +14 on that one. And then we had a break even, and then we had another break even, and then we had a +16 to get us to 30. And then I stopped out. -60 put us at -30, and then I stopped out again. -60 again put us down to -90. If I didn't have those two stop outs, we would have been where I wanted to be on the day. We were at that point right here. That was at 11:11. The NQ it got a little squirrely in here. Yeah, it was choosing a direction, and right in here while it was doing it, this was a good trade, a good valid trade. I was aggressive on that one. If I wouldn't have been aggressive and I would have waited for the conservative trade, then we would have had profit on that, and we wouldn't probably even taken that trade. If I was, no, we would have still taken that trade. We would have stopped out on that, but we would have money on that one. And then it flipped around, and this is during the break. It gave a nice short trade right here. It gave a good profit, and then the next trade was, it wasn't until all the way over here. I had a nice long trade right there that would have given you some profit. Then you had to wait until it got into the overbought for the next one. The next one wouldn't have been until all the way over here. That would have given you some profit. So it moved around a lot, but it was changing directions right here. And during this direction change part, I got hit twice right here. Once because I did an aggressive trade there, and this would have just been a stop out. Otherwise, the trades would have been okay through there. Now, Dwayne was talking about this stuff earlier. This candle right here, all morning, this candle was down here. It was a red candle and it was down here. Price was below the open of the candle. I've been watching it a little bit myself because if by the end of the day we do close up here above this level right here, if we close higher than where we've been so far today, either there or above that, that sets us up for next week, a big move next week. Okay, a big bullish move next week. Now, Dwayne was saying something about Trump being angry right now. I don't know why. I didn't ask this morning, but so you never know what's going to come out of Trump's mouth. That may be good or bad for confidence in the markets. I'll put it that way. All right. So you know what I haven't looked at? I'm curious. I think crypto is out at the number 6 one. I was in that CSPX. How about the number 8 one? Okay, XRP's a little positive on the day. And what is this one? 290. I don't know what that is. It's a stock, I think. Okay, I was just going to see what Bitcoin was doing right now. Let's take out the question box and see. I don't see any questions in there. All right, so it's 1:10, so I am going to trade for 20 minutes now. Jay, did you make it in here? And Jay did not make it in here. Okay. Well, that's okay. So what I'm looking for right now, this was the last time it went into the oversold, so we haven't had a full cycle yet. So what that means to me, where's my, oh, here it is, right? What that means to me is this is the leg length we're considering. All right, what's probably going to happen is it's going to be this leg length right here. So we'd be looking for it to pull down to about right here, find some support there, maybe give us a trade from there to give us another leg length this size. All right, but it hasn't done the full cycle from here up to there and then back down to here yet. To get a spot to pull the fib from, right? But it looks like the way it's going to work out is we're going to get a down close on this bar that's going to bring us right here into this level. Now, the bar after that, you could go aggressively long there if you wanted to, but the bar after that is going to be significant too. Okay. Now, over here on the ES, this right here is where it should pull back to right now. Okay, on the Russell, same thing right about here. And on gold, we're bearish right now, and it didn't finish the leg down, so you would have stopped out here. So you don't really have anything to work with here on the gold right now, but if it does break that right there, this is going to be the pullback spot right here. This is going to flip the YBR, I think, this current bar. Okay. All right. There, just flip the YBR. So from here up to here is your leg length. From here to here is your leg length. That's the midpoint. That's what I'd be looking for an entry at. Okay. All right. So for anybody that's just coming in right now on YouTube, if you haven't taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Click on that purple button, and it will bring you to this page. Just fill it out. Okay. Down here at the bottom, make sure we get your TradingView login ID. Mandatory right there. It says mandatory right on it. Make sure we get your TradingView login ID. Okay. All right. Let me close that one. And we're back in here. So we just have to wait for a pullback now. Now, there was a fella in the room this morning who was asking for training videos. What I had suggested was look at yesterday's YouTube video that I did, because I did some stuff in there that I think was probably more what he was looking for. But I did say that I would cover some of this stuff today. So let's cover some of this stuff.
I say right become a member and then you'll have access to it all.
Yes. Yes. He's not here right now, though. But anybody can become a member and you have access to everything, all the training videos, the stuff we did last night, the stuff in the partners meeting. I think that was a good meeting too. Oops. I keep trying to grab this thing so I can slide it back. All right, so what we're looking for here is a retracement, right? We're looking for this blue line to get down into the oversold. We're above the YBR, so we're looking for long opportunities, but we want to enter when it pulls back. So there's two ways to enter when it pulls back. One is when it actually does get back, and one is when it starts going back in the right direction. Right? So the conservative trade is to enter when it starts going back in the right direction. Okay. That is to enter when it starts going back into the right direction is a conservative trade. So what that looks like is something like this right here. Comes back, goes down, and it starts to go back up when it comes out of the oversold. That's your conservative right there. Why am I not able to draw down here anymore? It doesn't make sense. That's your conservative. Okay, it would be right here. I can put one of those down there. That'd be a conservative entry. Okay, the aggressive entry, it'd be the close of that bar. The aggressive entry would be when it goes into the oversold right here. All right, so that'd be the open of this bar instead of the close of that bar. In this case, it's not that big of a difference, but a lot of times it's going to be a full bar length. You know, a lot of times it'll be like more like this one right here, where it was 13 ticks in the bar difference. Right. So the conservative entry is when it comes out of the oversold. The aggressive entry is when it goes into the oversold, and that'd be on that bar right there. All right. You see, when it goes into the oversold, you buy the open of this bar. When it comes out of the oversold, you buy the open of the next bar. Right, that's the difference between the entries. And in this case, it's 13 ticks in the bar length. And that, you know, that's significant. If you do that 2 or 3 times, 13 ticks is the goal for the day. It's 1.5 times the goal for the day. It's significant. So what I was trying to illustrate was when you should consider the aggressive compared to the conservative. All right, and when you're, let me turn this on here too. Okay. So what I was suggesting here is the 2 different ways to trade this, right? You can be aggressive when this goes down into the oversold. You buy the open of the bar. As soon as that goes into the oversold, you buy the open of the bar, all right? The conservative is when it comes out of the oversold. You buy the open of the next bar, all right? Or you have your stop order waiting for the close of the current bar. So you buy the open of the next bar. Those are the 2 different ways to trade this, right? You're going to be going long either way because you're above the YBR. So there's the aggressive with the trend and the conservative with the trend. So the difference in this case is 13 ticks. If you bought the open of this bar aggressively, when this bar closed down, bought the open of that bar aggressively, you'd be 13 ticks ahead of waiting for it to close and buy into the next bar, 13 or 14, maybe 15 ticks. Now, what I wanted to show is why you might want to consider that, or why you wouldn't consider that. And you know, both of these trades are trend trades, right? Because you're above the YBR, they're both going to be long trades. If you're below the YBR, like over here, you'd be considering short trades. Okay, over here, you'd be considering short trades. So like right here, you could have sold on this bar right here, the open of that bar, when it went into the overbought, sold the open, or waited for the close of this bar right here where it came out of the overbought. The difference here would have been about 6 or 8 ticks. You might have been pretty close to a stop out there. But the difference would have been about 6 or 8 ticks. And the reason you would do aggressive as opposed to conservative is if, one, it's chopping around, or now, one, you're in chop. Now, the aggressive stuff works better in chop than the conservative because with the aggressive, you're getting in at the top of it up here. You're not waiting for the bar to close down. If you wait for the bar to close down for the conservative, you're getting in right here. Right? With the aggressive, you're getting in here instead of here, or selling here instead of here, buying here instead of here with the aggressive. All right, with the conservative, you're doing this. You're selling here is conservative when it comes out of the overbought. You're selling here. You're buying there when it comes out of the oversold. You're selling here when it comes out of the overbought. You're buying here when it comes out of the oversold. All of those have to be with the trend. Okay. So there's 2 different reasons why you would switch between them. Now, if you have long leg lengths cause flat lines at the top and at the bottom. If you have long leg lengths, that means, long leg lengths like that, it takes 2 bars to go from the bottom to the top, right? It takes 2 bars to go from down here up to here. And if you have a long leg length like that, that might be 6 bars. But then you can have your 2 bars here and here that go from the bottom to the top. And then all that stuff that's moving up there is going to be flatlined down at the bottom. Down here is going to be flat, right, at the top. So the pullback that's going to happen, again, is going to be 2 bars from the top to the bottom. So the pullback is going to bring you from here, first bar, then here, second bar. All right, so then you'll be down there in the bottom. Now, if that is the case, then It's not the ideal spot to enter. If the second bar were to be all the way down here at the midpoint, it goes into the oversold at the midpoint, then that right there is a place where you might want to aggressively buy the open of the next bar. When it goes down here into the oversold and you're at the midpoint at the same time, this right here is a good example of it, right? Because this is the midpoint of this leg. So this is a good example of it right here. If it happens to go down here, and when it gets into the oversold right here, that was the down close of this red bar right here. When it gets into the oversold right there, that is when you might want to consider, because it's at the midpoint, you're buying at the midpoint. You might want to consider buying the open of the next bar and not waiting for the next bar to close. Either way, this worked out, but that's one reason why you might want to consider it. The other reason is because you have long leg lengths, and it's going to take more than, it's going to cause a flat spot down here in the bottom in the pullback. If you have long leg lengths, you can have a flat spot in the pullback.
And
Right.
the resistance we have right here, right now, is the highest weekly trading zone for the week, 46/47. So
Okay.
just
And
barely above it.
And the other reason is just because it gets to the midpoint. So the reason you would switch back and forth is it is kind of stuck here. This is the S kind of stuck here. The reason you would switch back and forth is because you have long leg lengths. When you're in chop and it's just going up and down like this, where it's choppy like this, you don't expect it's going to keep going up. You expect it's going to stop. There's three different kinds of chop, right? There's chop that's in a triangle like that. That's bugle. There's chop that's in a triangle like that. That's just a regular triangle. And chop that's in a channel like that. The best kind of chop is the channel chop, where it's just going back and forth like this. Because you can trade that. You know where the top and bottom are going to be, and it's usually pretty good and pretty easy to do. This kind of chop is pretty easy to trade too, because you can see where the top and bottom should be, so you can see what to expect out of a trade. This type of chop is, I want to say it's the worst type of chop because you can't see where the price is going to go. But the thing about this type of chop, and this is what I was getting into earlier today, when you get this type of chop, like a bugle chop, where you have higher highs and lower lows at the same time, you're not really staying inside any kind of chop like this. You're getting higher highs and higher lows at the same time. That usually happens right before a trend change. Okay, where you would have something. Let me see if I can find a spot like this right here. Right, you had something that right here you had higher highs and higher highs and higher lows and higher lows, and then finally it stops giving you higher highs, and then all of a sudden, bam, you have a lower low, right? This is usually what happens at the beginning of a trend change. And it happened kind of over here. Both of these times that it didn't really change a trend. It just went into some more chop. But usually at the beginning of a trend change, that's what happens. And then what you expect, once it finally does something inside there, like it goes, like the YBR is going to give you some sort of direction, right? So if the YBR flips down, you're looking for things to go short. Then prior to it doing that, the bars were going like this, right? They're going up like this and up like this, and you got higher highs, and then it comes down like this and down like this and down like that. Now you have lower lows. So you have higher highs and lower lows. So the only thing you have to work with is this piece right here, right? If the YBR says to look for a short, then right in here, you're going to look for a retracement back to the midpoint of this. As this leg gets bigger, that midpoint gets moved around. But this is where you're going to look for an entry. If you have, let's say, for instance, you're below the YBR, you're going to be looking for an entry here when this gets up into the overbought. And you really don't have any direction on it yet, so you're not going to be too aggressive on that. You're going to want to be conservative, right? Because this should be sloping down. So you should have a couple of bars to get down to here. So your entry point would be somewhere in here. All right, ideally your entry point would be closer to the midpoint, but be somewhere in here for the next push down. So you have a couple of legs down and to be able to get your stop to break even, then take some profit. And that should be the beginning of a trend. From there, it should pull back up like this, about to here, and then push back down like that. That's what usually happens when you get this kind of chop, right? When you have this, it usually happens as prices approaching some area of support or resistance and the markets just consolidate. this is the same thing. When the markets have done a big move, usually like a big move like this, then they consolidate. But that is sort of the lesson that I want to do, because I know we had some guys in the room this morning that were looking for a video. And what I referred them to the YouTube that's being recorded right now, and also the YouTube that we did yesterday, because I talked about this stuff in yesterday's YouTube a little bit. But I'm also recording this separately right now, so we can have a separate video on this. So you see how this kept going up. So this midpoint right here is moving up. It's not here anymore. It's now up here. Okay, so that's what you'd be looking for. Your ideal entry point is going to be up. It's going to be right about here. So you'd want to see a pullback down to here, but because it's so far down, it's going to give you a flat spot down here at the bottom. If it does that, it's going to take more than one bar. Like this down close on this is going to get this to like right here. And then the next down close will get it down into the oversold. And then the next down close will get you to where you want to be. So at that point, you're going to have a flat spot down here. So you don't want to be aggressive in this case. All right. That's why, if you look at the spreadsheet and we go back to December right here, where I started being really aggressive. I was trading really aggressive then because we were in a lot of chop. It was right before Christmas. We had a lot of chop in there. I was being really aggressive, and I was trading in both directions regardless of trend. Right. Doing that, I was using this. And whenever we had divergence in here between the blue and the black, I would sell. If the blue went into the overbought by itself, I'd sell the open of the next bar. If it went into the oversold by itself, I'd buy the open of the next bar. You can see how that worked out, right? Right. Went into the overbought by itself, sell the open. Went into the oversold by itself, buy the open. That's what I was doing, and that worked great. But since the tariff stuff started, the markets they've been making big legs, much bigger legs, and this divergence stuff doesn't work well when you have longer leg lengths. You need smaller leg lengths. You need to go in and out really quick for this stuff to work. So that's the difference, right? This divergence stuff works great in chop. It's really, really good in chop.
Today's been pretty tame compared to what we've seen throughout the week.
It has. So, the conservative trades, it's actually been a little choppy today. So the conservative trades haven't worked as well today as they normally would. I mean, they still work. They worked well enough to get the goal for the day. It took me 4 trades today, where normally it takes me 1. But 1 or 2. But so we're, this is right here. This is a nice long leg. So you're not going to be aggressive on this. You're going to wait for it to pull back. It's going to make a flat spot down here and wait for it to come out of there and take the conservative trade. The legs are longer, so you can let it go a little further in the direction that it needs to go, because you have all this space in here where you're going to be able to trade it. It's going to go down here like this. And I don't know that it's actually going to go there, but ideally it would go there. The next bar would close up like this, and that's where you'd enter right there. Okay, then you have all this space for it to get to the prior swing high, to get to the real first area of resistance. You have all that space in there, and that's plenty of room to get your goal for the day and then some. It should duplicate the leg length, so it should go through that, but I suspect what it'll do once it pulls back is it's going to go up and it's going to hit that area of resistance and pull back a little bit. It's a long leg length, so it's probably going to have some chop following it here a little bit. The last one was this big and it pulled back this much. This is a longer leg. It'll probably pull back deeper, probably down to here. It probably won't hit this level that I've drawn yet. But if we do this, you see it's right up there now is where it is. Okay, and that keeps moving up. All right, that was a lot of time. All right, stop that recording, and now I'll get back in here. I'll say, okay, if you haven't taken the free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Just click on that purple button. It's going to bring you to the registration page. Just fill out the form. Make sure you use TradingView login ID down here at the bottom. Okay. We don't really care about the Ninja ID. We want your TradingView login ID down here at the bottom. Okay. All right. So let me go look at that one thing that Dwayne was just talking about on the bigger picture. We're at right here. Right here at, what was that, Dwayne? Was it a fib or was it a weekly trading zone? Right.
We're at the highest weekly trading zone, 46/47.
Okay.
Now we're a little bit above it.
Yes. And that's the end of the week. At the beginning of the week, when we were down here, we were at the lowest, or near the lowest weekly trading zone, right? Weren't we? At the lowest one was, yeah.
No, we didn't. We On Monday, it looked as if we could hit the lowest zone by Tuesday, but we never did.
Yeah, that's what we were talking about it. We said if it does get down there by the end of the week, it'll be really bullish for the rest of the week, and it turned out to be really bullish anyway for the rest of the week. All right.
In fact, Monday was a big down day, and then we had turnaround Tuesday, which was huge.
It was, and then even more turnaround Thursday, or continuation Thursday. All right. Well, with that, I guess I can pass it back out to you in fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep. Recap of the morning session.
Today it took. That's not right. I'm looking wrong. It was 8 minutes and 4 trades, I think. Hang on. 8 minutes and 4 trades to get to $1,150 with 10 contracts on.
Good job.
Thank you. Thank you very much.
All right, guys. We've already been through all the individual markets. So if you missed it, you can catch it later. About a half hour from now at youtube.com/CFRN. Now, we'll take one last look at the daily chart of the ES. Remember we talked about we had this doji, and the horizontal line on the doji was right at the 50% reverse fib. Now we're seeing a little bit of bullish movement. But remember over here, this high, 64.75. We got 54.5 as the high so far. But this high right here is potential resistance, 64.75. So if price takes out this high, then you've got plenty of room to get your goal before it runs into resistance at the high of this candle right here. Doesn't look like a lot because this is a daily chart, but I believe in the top down look, so things are looking a wee bullish. All right, to become a member, go to mytradingiq.com, watch the videos, read all the information that's there for you, and then send an email to support@cfrn.net. In the subject line, just tell us you want to become a member. We'll send you an email that explains exactly what it means to become a passport holder and all that you're entitled to as a member. There's even a link you can click to seal the deal. Number one, you're going to get 2 hours of live training every trading day. 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. So we plug that hole. Along with 2 hours of group training every day in an interactive environment, you also have access to private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets, all time frames. Futures, stocks, crypto, Forex, ETFs. Doesn't matter because price flows the same across all markets and all time frames. As a passport holder, you get the Logic 247 alerts around the clock, the concierge trade alerts the second they're published each evening. And again, last night they were published 5 minutes ahead of the open. You'll get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. You'll be able to attend the members only workshop every Thursday night. And you get the golden key that opens all the private channels in Telegram. We got lots of channels. When you're on the trial, you have access to the public channels, but you can still converse with our traders. But once you actually become a member, then you have access to everything. Everything a trader needs. All under one roof, one low price. Just send your email here. Let us know you're ready to get on board. Okay, let's wrap it up with our good word for today. Keep praying and keep believing. Hebrews 10:36. For you have need of endurance, so that after you have done the will of God, you may receive the promise. How long should you keep praying and believing God for the answer? Well, Scripture addresses your question. Hebrews 10:35 and 6. Therefore, do not cast away your confidence, which has great reward. For you have need of endurance, so that after you have done the will of God, you may receive the promise. Many of God's promises have timelines, and you need long-distance faith to receive them. Note the word endurance in that scripture, and picture yourself as a marathon runner, determined to finish the race and receive the prize. Also note in that scripture the words, after you have done the will of God, you may receive the promise. You say, I'm not sure what God's will in this matter is. Well, what does God's word say? That is what you must obey, stand on, and speak over your situation. For 20 years, Abraham looked up into the night sky, believing in Genesis 15:5, Lord, you said my children would be as numerous as the stars. I don't know how you're going to do it because I'm 100 years old and my wife Sarah is 90, but I'm going to believe you anyway. When you pray that way, you risk looking foolish in the eyes of others, but receiving the miraculous can involve looking ridiculous. Like Jesus' servants, when he told them to fill the pots with water when what they needed was wine, or rubbing clay on a blind man's eyes so that he would receive his sight. But the wedding guests drank the finest wine, and the blind man went home seeing. Why? Because they stood on the word Jesus gave them. And here it is, thousands of years later, you must do the very same thing. And that's our good word for the day and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.